Okay. Hi guys, just let me know if you can hear me okay. G'day Nifty. How are you, mate? Just watching these indices at this stage. I thought we could hold. It looks like we're going to go through. This is the Hang Seng. Anyone trades the Hang Seng? Got the Aussie. We're looking at it along. It just didn't quite give me my setup. I mean, it was going to be a bit risky going through that high. This is a 30-minute chart. But it did play it all right. John, how are you, mate? Gino, how are you, mate? And Peter, how are we doing? Well? So I might as well just talk through. Oh, there we go. Talk through these indices. They're looking. I mean, look at the Dow. That's just grinding higher. So it's very interesting to see that gap higher for whatever reason, and then a bit of a washout lower, trying to close that gap, held up on this. I don't know if you can see that support. Resistance now support from previous highs. You can see those highs, rejected, and then all of a sudden it's gapped up above, come back to test. So there would have been some sellers looking for that gap close. I was actually thinking it could do that. But then I was really looking for, I wanted to see a bit of a squeeze on some of these buys from Friday night, but it's just not happening. I mean, it's irrelevant how many cases we're getting at the moment. A little bit of talk of a vaccine in the US, and bang, markets finish on a high for the week. So it's very choppy at the moment. And it's not really a vaccine. All they're seeing is cases improving that could help in what was it when they're on treatment. It's not a vaccine as such, but it's just enough to get out there and not spook the market, but anyone that's looking for shorts just to squeeze them out. So it looks like the market's they're getting short a bit and then getting squeezed back out. They're getting short a bit and they're getting squeezed back out. And then you see this action today. I mean, that was a bit of a grind down. It was just a pop straight back up. This would have dragged in some sellers. You can see off this. And it's only an inside level. It's not a key level, but people would have thought, okay, we've got this gap up, weakness come in, pop back up. You've got a lower high. Anyone that's been following us for a while, we're looking for shoulder entry. So shoulders meaning lower highs coming into play, and you've got that through there, which is just a trap them in straight back out. So I would prefer to see a shoulder, the market press down through the MAs. When it's below the MAs, press down, retrace to the MAs rather than retrace above. And then when you get your entry, you're sort of below the MAs, if that makes sense. And those MAs are rising. So I wasn't going to go short there, but that would have trapped a few traders that we're looking for that pushback down, potentially that gap close, waiting for more confirmation. They got a potential shoulder and then jumping in short. So didn't like that one. I did trade this morning. I traded the Hang Seng. Now I wanted to had two shorts. The first was a small stop. I was watching it, and it might be easy to see on the 1 minute chart. Now where was it? It was here. Okay. So it was in this expansion down. So I was looking at this kind of thing. And if you just remember the 5 minute chart, you've got the market's pressed down. Was that from the open? 11. So that's the open. We've had this grind up and we start to fail. Yep, it was there. It was this secondary. So yeah, that flush down, that grind back up, and you come back up to the highs. So the US is looking quite strong. At that stage, I was just looking for it. Say, if we get a shoulder trade, which is what we started to play out here, I'm going to have to go short because I think we could start to really push through those lows. And again, it's not technically, it's very hard to trade at the moment because any good setups that are just failing on the short side anyway. It's like they're setting it up on the short side. And if you can see, whoops, I'll get rid of that. This rising support line was broken and then complete failure as it starts to come back up towards these highs again. So it's a tough one. It's a tough one. But that was a short premise. If you can see that push down, you've got this big shoulder here, and that started to break down again, short in here, and it just kept chopping around. It looked like it was getting bought. So I quick to close for about 5 or 6 point loss on the first one. And as I was watching it, then you got this candle, you got green candle, red candle, green candle, and it was just starting to fail again. I went, okay, I've got to go short in here for about, I think it was 40 pips or so, 40 points. So it was, all in all, it was good, but it wasn't continuing. I thought we've got this breakdown and it come through the lows and that was it. Then we started to get a high low play out. So the second entry, I was looking at this thinking if we get like a retest fail, anyone that's like I said, following us, that retest fail is an RTF, we call it. Um, off that level, I want to see a shoulder again. But you started to get this breakdown again. It was trapping traders, so you started to get, and that's why I'm a massive fan of a shoulder, a lower high coming into play off a key level, because the market's broken through this high low, broken through. There would have been people shorting this with a stop above. All right, thinking, okay, that's it, double top. We've got this double top formation. We're failing. We're going down. It's a give in. We're going down to the lows instead. Traps them straight back up again to clean them out. So that's why I'm always looking for, once you get that break, I mean, there's times when it's just going to go and that is going to play out and you get left standing on the sidelines. But I'd rather that with no loss or no win than the probability that I'm going to get cleaned up all the time. So I think, say it's 50-50, 50-50 it's going to break and retrace and clean you up at the highs, or it's going to go off a shoulder and then find more weakness. So shoulder trades for me, the lower high, when that comes into play, it's just a sign that, you know, there's confirmation of weakness, okay? This is not confirmation. A break of that low is not confirmation at all. It's a trap. And they set traps time and time again. So you just got to be wary. You know your entry criteria. You know what you're looking for. I mean, say, for instance, this one, when you got that pop up, you know, weakness here, your first shoulder, key shoulder on the 5 minute, and then you've got this small shoulder. You're looking for that expansion low because that's going to add up to a lot of people. If it's not going to go higher, you're buying it here. You've got enough fuel in the market getting squeezed out. Anyone that's held through this, bought in here, hold through this little move is looking for it. Okay, they get out of jail card, get out of jail free card on a bounce. It's not playing out. They might be holding it there, and sooner or later they're going to have to capitulate and give up because this thing could really go hard. So that's the reasoning why, you know, that shoulder is what I was working into, that shoulder, knowing that we've got weakness, further weakness, enough buys. We haven't broken this low. There would have been a lot of buyers here. Okay, we break below that low. My stop, I'm going to target. That's where my stops are. You know, it's held up here. They're looking good. You know, it's starting to hold up here. They're trying, and it doesn't capitulate. And that's the kind of short we're looking for. Okay, we're looking for an entry off that sort of price action. And it didn't play out here. So that's, you know, if anyone understands, that's pretty much what we're looking for shorts. Why we're looking for that shoulder. And the shoulder, I mean, if we've got this entry, get rid of this. Just 1 second. I hope this is helping, guys. If I'm just rambling on rather than talking about what's going on, it's good just to see where we're going. So from here, if we got that push up, whoops, wrong one. We got that push up and we start to fail at a low level, that to me is a short entry. Okay, so you've got a break of this anchor, and this low here is this low here. So if I'm just saying, if it pops back up and it doesn't go through, but instead we start to get this pattern, that's where I'd want to be short. I've got lower risk. I know that we've got a shoulder. I've got my retest fail. I've got my lower high. Lower high is a confirmation. Is a lot further weakness to come in, and then go short, looking for a move down to this 25, say 730 thereabouts, and that might have given us 50 to 100 if we're lucky. Any, you know, with a bit more, if we got really lucky, if we broke down through those lows. You know, with this kind of price action, if you got that shoulder off this RTF retest fail, there's a good chance we're going to plow straight through this low. But at this stage, it's the market's very rangy. They do not want to go in there, and they're flushing people in, turn around and squeeze them back out, flushing people in, squeeze them back out. That's why intraday trading, you really want to be on the front foot. Yeah, it is. It's a very hard index to trade, but I mean, when it pays off, it can pay off really well. You know, just as a bit of a side note, there was a trade that I was looking at. Say the price action was like this. You know, it's your typical high low. At that stage, you know, this was a while ago, so I'm just talking about how it can pay off. You're looking at the market popping up. We're getting this grind lower, and I've got my high low. It went through that high, right? And I got sat there waiting for about literally 1 minute. I think it pulled back by about 5 or 10 points, and before you knew it, I was up 150. Literally in the next 2 minutes, it just took off like a rocket. So I was on the right side of the action. It took off, and I couldn't move my limit fast enough before I got tagged. I mean, it went another 50 or so, but that's the speed that it can move. So when you're on the right side of the action, it's great. And when it moves, you know you're right fairly quickly. So that's the beauty of trading the Hang Seng. If you got a move like this, for instance, and you're thinking about going short, you can short on the third candle because you know by then, look, it's going down. There's no sort of, and when it does move, it moves quite hard and it goes down to another level. So you've got a lot of fat in those moves when they do play out. Whereas when we're trading the SPY during the day, it doesn't quite play out as nicely. You don't get as good moves. They tend to be a bit swingy. I mean, you can trade it. I just find this a bit harder to trade for me. I like the Hang Seng and I like the Dow. Dow's not doing anything at the moment, but we'll see how that goes. That's probably not really a level. So with the Dow, you can see that it's popped up at you above the MAs, go swing below the MAs, back above the MAs, holding, grinding up. I don't like this kind of move. It's a grind. I'd rather see, for some weakness, if I'm looking to sell it, at least down to that low, potentially lower, through this level, back through this level, then I want that shoulder. I want a key shoulder. I don't want just one on for 1 minute. I would like to see a key shoulder. So there you go, guys. Yeah, no, exactly. Shoulders for me are just it's the key. We can all mark up levels. We can see where the action you would expect some sort of action or reaction. But if your criteria for entry is not right, it's a numbers, like I said, it's a numbers game, and if the numbers are not in your favour, it makes it very hard. All right, let's go that Aussie. That'll kill me. We had a short on the Aussie in here. Was it in here? Anyone that trade yet? Through 45 with a stop just above. Plan there just started as soon as that market started playing around the 69.25 zone. I was happy to take a partial, and eventually we got stopped out on the second half for only 10 pips gain, 25 and 10, I think it was, or 20 and 10. It turned out all right, but it was a good thing to do. You can see that market's really sort of range bound longer term. Let me just get rid of this. It's range bound between these lows and highs, so you've got to recognize that if it's going to drive into those lows and we're not going anywhere, if that was going to go through, it should have just gone through. We should have pulled back, smashed straight through it. But when it doesn't, you have to recognize that you've probably got weakness. So that's the idea behind sort of the longs today, because you know that anyone shorts have built up that might be holding it, especially through this level, holding it for a while, short off here, stop above, and they're looking for that further weakness. You're right through there, are starting to feel a bit in trouble here, and you've got this level, inside level, holding up at 69.39, just lead to a short squeeze. So as soon as we saw that rejection candle, down and straight back up again, for me, that's a wanting to be on the long side. It's just looking for the entry, and it just didn't play out, which is a bugger. Nice. All right, let's get into it. So markets Friday night, pretty strong in the US. Kept going, US dollar. US dollar originally, we'll just have a look at that. Is that what I want? Yep. You can see the US dollar, if I can find it. Yeah, that action there. So it was probably coming into there. That was the start of, the open, say, Sydney time, about 8 a.m. It grinded high, which is not too bad. It's sort of, but it was, you can see the wicks that were starting to come in. So it was sellers just happy to start to press it down, press it down, press it down. So the start of the European session, it basically caved in. We got a big sell-off back down. So you got enough fodder here on the long side built up to squeeze it back down. And then we had this little bounce. I think it was on numbers. Was it on numbers? Just prior to the numbers. So someone was saying that was you're reading the news, and this is the difference between trading and news. News see a reaction. I say, it was bought up, it sold off into the number. It's not. No, sorry. What did they say? I can't remember what they said now. I think they were talking up. There was numbers at 10:30 in the US, and they were saying, it was down because of the number. It's not really. It's just in a trend down. They got that reaction high. That was just shorts closing out, a bit of a short squeeze, just coming into the number. Anyone that wants to be square is buying it half an hour or so before the number, not mucking around, taking their profits off the table. They can always re-enter if it goes short, and that's what it did. So you got the US dollar continue to press lower. Later on the US session, I think it started to find some buying support. So today it's plowed, it's opened weaker, and we've gone straight back into that zone. So for me, that support zone there, if I just go out to an hourly, I think it's fairly key. If we get a massive sell-off, we've got this big flush through it. If we don't hold up here, especially after this sort of break to that, you can see that downtrend broke, we flushed, we've come back down again. If we don't hold this support, I would suggest we're going back down here. We're going to grind our way back down to 95 or thereabouts. And that's some serious weakness in the US dollar, which would suggest there's going to be some serious strength in the US equity markets. I don't see that, and I probably haven't been seeing that for a while. I've probably got the wrong hat on at the moment, the bear hat, but coming into earnings this week as well, I think it starts this week. We had a few popping out this week. I don't see how they can come and say we're doing really, really well. You know, with all the lockdowns and potentially more lockdowns to come. I don't know if you all agree with me, but I think we're really, you can see in Melbourne, those numbers, the virus numbers are going up, and that's absolutely nothing compared to what's happening in the US at the moment. So states have come out and they've gone back into lockdown, and other states were going to come out. They're not coming out of lockdown, or they're not easing restrictions. So all these things are starting to happen. I think for a lot of people, you come into earnings, if we get any sort of shocks to the downside on earnings, they might not give any sort of guidance for profit guidance, or earnings not as good as they expect, or they come out just in line. Um, it's a good reason to take some profit off the table. I don't see why it should just continue to go high in the back of thin air. So I mean, there's going to be job losses, and I know there's still over in the US. There's still a lot of there's job losses. Obviously, it was a bit better than expected. They always talk about the unemployment getting better than better than they expect, but it's bound to happen when you come out of lockdown. The jobs that people had originally lost are coming back, and they're getting counted. So they're getting counted as a job loss, obviously. And when they get put on hold, they're coming back to the workforce, and they're getting counted as a job gain. Now, what's going to happen when they go back into lockdown? Those jobs, unemployment rate should still go up. The US is, they're going to have to start funneling out some more money. Now, I think the Fed and that, they just can't keep printing money, forever. And Australian banks have also said, I don't know if you're reading the Aussie news, um, yeah, ridiculous with the case of viruses. It's just, I was talking about with my wife, we're looking at what we were, and everyone's going this big hoo-ha about Melbourne. A couple of hundred new cases when the US is getting 70,000 or something ridiculous. So per capita, they're killing us. They're winning the race. So I can't see why. I mean, if they just don't go into lockdown to try to save the economy, then you've got a whole different kettle of fish and few issues. So it'll be interesting to see what they do, and what the markets do. I just don't see stimulus, continued stimulus coming into the markets. Sooner or later, they have to flush out. You've got a massive debt issue in the US. Yeah, they're trillions of dollars worth of debt. They just keep printing money. Um, all these sort of factors. I just see too much pressure. So, I mean, all in all, if you're seeing a buying opportunity when the market's going, it's great. You just jump in and buy it, but you're always going to be wary. I'm not saying stay out of the market because it is going up. If you're buying the dip and it looks to be dipping and you've got your setup to go long, great. That's fine. It's just to be wary that is this going to keep going forever? I doubt it. Is there going to be another pullback? I really think so. Whether it's from now, a higher level, who knows? Um, there's a lot of things lining up why we should get weakness, but it has been lining up for a while too, and saying that. So yeah, this US dollar, if we start to hold this level, instead of break it, and that's, a lot of the times they can do that. They can plow into level, bounce back, break a trend, come back in, retest at a higher level, and that's got the bears straight back in again, and then flush them out and bang, up we go. I mean, if it does start to hold here, that's suggesting we're going to get a higher US dollar and we get a rally into the US dollar, safe haven buying, equity sell off, all those sorts of things. Now, if we plow straight through, it's just the reverse. So we're right at that cusp at the moment, and I think it's good timing considering we come into earnings. But yeah, it's there's that. You got the look at crude. Crude was well and truly ramped up as well. There's a bit of a breakdown. So we're talking that lower high, getting more selling. I got more selling, then basically turned on a dime, straight back up. So it's back up at that 40 region we spoke about quite a few times. You got a high here, reacted off there. We got through it and we reacted back off, held at higher level. And once we started getting back up, you can see this kind of action is not conducive a very strong market. I should actually clean that up. I'll clean that up just 1 second. Remove drawings. Let's just draw these levels again. We've got that. We've got a higher low. It was a bit of a bid zone coming there. And we've got a key low, or major low down here. All right, so I'm just seeing, well, actually, we'll just draw that up as well. Where are we? There we go. Just this high for reference. So you got the market was well and truly ramped up. That's fine. This could be a key washout. And then we have to, if that's going to be a key washout, I would expect the market to hold a higher level in here, maybe a bit of a pullback. So you get any of the bears that saw this and looking for that sell-off again, it comes back in, it holds a higher level, and up we go. So that's what I'll be looking for, maybe on the long side, if you're going to go long oil, and look for it to ramp up off a higher level. But if we start to chop around here and you start getting just a reverse, we start to chop around here and we're flushing out these minor highs and coming straight back into the zone, and we're starting to find this weakness play out, then I'll be looking for this lower highs coming to play. So I think there's two things. If it's going to be, we're talking about accumulation distribution, we're starting to accumulate here in the way of sells, then I would expect that to happen here. So anyone that's buying it is looking good for a while, and then they turn and get squeezed straight out. All right, but it's just going to chop around here. It's going to set a few traps for some buyers, maybe pop up through some highs and come straight back in. Trick the market into thinking we're going higher and then roll over. But I would expect it to do around the 40 mark. Now, if it's going to do the opposite, if the market wants to go higher, you would expect it to flush out. So it's just setting the trap again. So a bit of a flush lower to bring in some sellers going, okay, that's it. We're coming back off the 40 zone. We're going to go straight through 38. And all of a sudden it starts to hold a higher level. And that's got enough fodder to go back and squeeze them out and the market to rally and start to trend higher. I think we're going to do that from a lower level. So that's what I'd be looking for, those two sort of scenarios. And we'll just keep an eye on Crew, what it's saying to us. I mean, this scenario here suggests lower levels, suggests a break of that, suggests a move right down to, say, 37, which would match up to equity weakness. Okay. OPEC has been discussed production outputs again. Yeah. Well, they seem to be freeing up production, aren't they? They're happy to take off those production cuts. And what's that mean? That means potentially more, they're saying there's more demand, isn't there? If they're saying there's more demand, then and they're going to ease off those production cuts, ease back on them. That just means more output, doesn't it? More supply, which would pressure the market, you would expect. And potentially that's what's happened there, but I would expect that to be capped around, 40. Look, we'll see. Look at copper. We spoke about silver. Look at copper. Took off, absolutely charged higher. And that's today? So this is today. Copper is just ramping and ramping and ramping. If I would never go near that for a buy. It's whoever's been holding and accumulating that is doing quite well. It's been accumulated through here. We've just ramped up through those highs. Go to a daily chart. It's flush through these. We might be just trading up if we just take away that high. Actually, I'll draw that up. It might be longer term. We're trying to get to that level there. It's at 198. Let's say nearly 3 even. Right? If that's the case, you can understand why it's ramped up. But right where we are now, you would expect to find some sellers. You would expect to find some buyers take some profit off the table, longer term, shorter term, whatever. And if you're buying up there, I think you're absolutely mad. So it is going absolutely gangbusters. And that is a key level there. You can see the market's pressed down. We held this after we flushed out this low, held it. We started to head lower, and that was sort of that started a bigger trend, that capitulation down to this low one, say just below 2. We had this massive bounce, and it really has not had any pullback whatsoever on the daily charts anyway. And this latest action has just been ramped. It's been completely ramped up. So it's interesting to see, but I wouldn't touch that with a barge pole on the long side. And I mean, this could keep going. I know that, but to buy in a stretch market, it's just completely stretched is nuts. You got to steer clear of that sort of stuff. So yeah, it'd be interesting to see if we can hold a lower high, but this is not saying the equity markets are weak. It's saying that potentially be very, very careful on copper. But there is that, I guess, what is it? That lift in demand, expected lift in demand. Now, what if we go into lockdown? There's all these in the US, and I think it's just really just got to do with China. China not going back into lockdown, doing okay, is just probably the solid reason why the market wants to ramp higher. But sooner or later it has to come to a halt. You just cannot keep ramping like that. But either way, that's your copper. What else we got? Is there anything else you want to have a quick look at? And we spoke about most markets. Just want to see where the Hang Seng is. Yep, forget about that level there. All right, it's not really doing anything, is it? What's Dow doing? Oh. If Dow can hold below this MA and start to chop around a bit, we might see coming into the European session a bit of a sell-off. It could be setting up into the European session because all the markets, Europe was strong on Friday, US was strong on Friday. You would expect some profit taking, all those sorts of things. We've gone up on the back of a vaccine. Yeah, copper demand there, Pete. So as we're coming out of lockdown, they're just anticipating increased copper demand, for whatever reason, for building, all that sort of activities, they're expecting all that to ramp up. Now, I've got a feeling it's just been ramped to the high heavens um, by the late buyers or some real bulls. I mean, China's a massive consumer of copper, and now that they're out of, they've been doing quite well with the COVID-19 viruses. I think most of the market has been bullish purely on the back of that. And US too, any sort of increased activity is going to be increased demand, but if demand doesn't actually change too much and figures start coming out, it's not really doing anything. Prices are probably overextended on the upside, I would expect. But it's a good indicator of what the market's doing, because indices sell off, copper will come crashing down, because indices will be selling off because everyone's nervous about the lockdown effects on companies, blah, blah, blah. We know how that heads down. And then obviously that flows on into demand into copper, demand into oil. But at this time, those markets are actually heading higher. So I know we talk about it a lot, and as a pure stock trader, someone's actually told me in the past, why are you looking at this? Why are you looking at that? Because things are very easy. If you're a stock trader and you're used to buying, they're very easy when it's a bull market and it's going up. That's not where you're going to get caught. But if you don't understand that markets can smash you on the downside, you're either just a buy and hold, and if you happen to buy at the high, like I said back in the GFC, you're buying, loading up the portfolio in 2007. We had a pullback, and that's fine. It's coming into 2008. We didn't get back there for 10 years. So if you got to those levels in 10 years anyway, depending on what stocks you bought, but generally we only got back there, was it last year, to 68, 64, 6,500 on the ASX. Now, I would always look at the correlated markets, and it's mainly for the bigger moves. So that's why I look at them continuously to see what's copper doing, what's oil doing with regards to demand, what the overall index is doing, what's the US dollar doing, just to get a picture of the overall market, the macro view, okay? Because you don't want to be buying up here in the shares at the moment, say on the ASX, especially if you're margining. If you're share trading, fine. But if you're margining, using margins in your CFDs for your shares, just trying to get a bit more bang for your buck, and the market comes crashing down, you can expect that to get closed out pretty quickly, right? You get margined out, all that sort of stuff. So if you're not taking into account what the macro view is, I just think you're falling short. The SPY go now, that's a good little, potentially a good sell. Now look at this as an RTF. I mean, the one biggest problem we've got, so this is a 5-minute chart. So this level here, it's started to fail. That's an inside level. So what we've had, the market's opened up, it's chopped around this high, and what it's done, you can see overnight it will do that time and time again. It will push above a key level. What that does is drag in some buyers. It looks positive on the open, and it chops around that level. It suckers in some buyers because it's a key level. The market is stretched. The market was stretched up here early on this morning, but you can see that sellers kept coming in around, this level here. So the SPY's popped down. It's chopped around here, right up until that last test at 11 o'clock when the Hang Seng opened. Hang Seng's got sold off a touch, or did get sold off. The SPY's come crashing down, and we've come retraced here, a bit of a flush of this low, held up. So, okay, once you get a flush of that low, anyone that's bearish is looking at it going, all right, maybe we need a bigger retracement, need to reset, and we'll see what happens if further weakness comes in. And further weakness comes in, so we call that the RTF, retest fail of that level. So that's the anchor to your trend down. It's popped back up, held the anchor to the trend down, so the weakness is still there. You've come crashing down. You've held this lower high shoulder trade, so you can easily, if you're looking at that, and we're talking about boxing up our risk. Boxing up our risk means if you just do, basically a box, if I could say it any other way, where you would enter as low end and break out, so the bottom end of the box, and your risk is above the top. Okay, so you know exactly where your risk is. See if it continues down. I mean, whether this does or not, you've got a low that you're coming straight into here, which could provide some sort of support, or it may just blast straight through. But either way, weakness is coming straight into this level. So far, if you took it out the low, you've got it, say, 32 down to 24. You've got it 10 points gain, just about 8 points at the moment. And if that continues down, if it starts to hold up here, so this is where the latest video I just sent out about using different time frames. So we got a question from a trader. He knows who he is. I won't put up his name, but about using the entries and how do you enter, and why don't you let the candle close before you enter. The candle to me is irrelevant where it is. It's levels. Because if the candle, if you just say it pops up above a level and then comes back down below and it closes there, that's fine. Or if it closes above, it doesn't, close out that level, all that sort of thing. To me, it doesn't really matter where it closes because the damage is done. So we're talking about, if I'm looking at a certain level, I'm looking at a level because I think there's stops below it. I think there's stops above it. So whether the market, spikes up here and straight back down again, they say, oh, that's, for instance, if it does this, it spikes up, closes back below, you go, okay, that's a trick. It's closed below, let's go short. It doesn't, it's cleared the way. For me, it's cleared the way of stops, and it can easily start to hold again, and they start accumulating, and then we get this rally back up again. All right, so to me, the wicks, if it's wicky, I know that's rejection. Okay, so there's rejection on this candle here. It's flushed down. So if you're looking at that, just on this one candle here, it hasn't closed below this low. Okay, so you could turn bullish, that's fine, but you got to realize that I still take notice of that a lot because it has flushed out a level, it's cleaned it out, it's triggered some stops. And why does it trigger some stops? Potentially white, not so much that I would sell on that candle there. I'm just trying to think of a better way to explain it. There's weakness coming in, it's flushed down that low. If you were going to sell it, I would still sell it. And if I'm keen to sell it there, I would sell it on the break. I don't really wait for that candle to finish because a break to me, if I'm right, it's triggered some stops and that thing could just keep smashing lower. All right. I'm not really concerned about waiting for that to stop, especially if I've got my stop up here, just above this lower high. And now it's started to work out, under pressure, I might be stopped out, I might not. It's still come back down and it's still trading down to that level. So when you're looking for just the candles to close, I'm not a big believer in that. And I take if anyone that notices, I take my resistance too. So a lot of people will put, a trending level like that, they take it where the market has touched, not really touched, but it's closed, it's closed, it's closed. I take it, and I'm very particular about that because to me, it's touched up on a level. It doesn't matter if it's backed off from that level, but I find that's my resistance zone. Okay, and for me, that works. It's worked time and time again. You might find that if you had a resistance, and I'm digressing quite a bit here, if it can actually draw that line, if you had a resistance like that, for instance, and you were just selling on that resistance, I mean, I don't know how you would trade it, but the market could come up, plow through that, trigger the stops, and come straight back down and still hold that trend down. But if you're, I'm just trying to think, if you were trading off, well, that's not really working out what I'm trying to say, actually. It comes back down to the stops. That's what I'm trying to say. And that's why, I mean, if it's traded that level, it's traded that level. I don't care if it's got a wick there or whatever. It's traded that level and it's triggered some action, whether it's buying or selling. All right. So that's why I like to use, resistance across the tops, because if it starts to break that, to me, it's a clear sign that it's sort of in new territory. But when it comes up here and reacts off there, yeah, that's all good and proper. It's taken across these closes. That's great, but there's going to be times when it can go straight through and you get bullish because it's breaking above that trend line, but then it comes straight back down again. And it's probably because it's across the tops. The tick, do you mean stop the tick chart, or I don't really use tick charts? So my entries are based off shoulders, and that's, and I would like to sell, so if I'm selling off this shoulder and keeping my stop above it, that's what I'll be looking at doing. I'm generally trading off the 5 minute at the moment. I was trading off the 1 minute. So when I like my 30, my 5, and my 1 for intraday. Okay, my 30 minute for the general trend, the overall trend and key levels and key breaks of a 30-minute candle. And they tend to match off with nice little entries off a 5-minute candle. 5 minute, I think there's more emphasis on that move, especially if you've got this lower high here. And 1 minute is more to refine my exits than anything, and refine the entries too. If I get that confirmation on the 1, it's sort of chopping around and keeps getting knocked down, then I'd want to be going short because that matches off what's happening on the 5 as well generally. But coming down here, what I was saying about changing your timeframes, there was a good example we had in the Dow that I put up in the video, is that, yeah, you got in here. Now, if you got in short here purely off the 5 minute and you're not whipping around charts, and you only change around charts to find what's going to happen, because you've got to bear in mind this level is here. Just because it's come down and finished above it doesn't mean that it hasn't traded down there. So the fact that it's traded down there, someone might have bought the break of that candle with the stops below. So you know that's an active level. All right. So we've got that active level. We've spiked down into there. We've rejected it. Who's to say on the 5-minute we just turn around and we plow straight back up? So you end up getting stopped with your stop above 59.45, with no sort of bearing, because there's only been one candle down that got you in. The next candle's turn around and come straight back up. But if you drop it down to, say, a 1 minute, and this is how I would use my 1 minute charts, I'm starting to see this not continue. I'm either going to take some off the table, some profit off the table, because for me, if that was real weakness, that should have gone straight below that low. It's now, instead, it's reacted off that low and it's starting to come back up. Especially when you got a red candle here, where it's, you would expect that some sellers are started to come in here and they're going straight back out again. So potentially I'm all out about now, with a pop above there. It could be wrong. It might turn around and go straight back down again, but I'm willing to do that to protect myself on the lower time frame charts, because the 5 minutes not giving me enough information. Right? But on the 1 minute, and this, I'm not saying you all trade off the 1 minute chart, I'm just saying because it's quite fast, but it shows you there's more information on that chart. There's more information of what could be happening. For every 1 minute candle, you're getting a bit more information of what the interaction between buyers and sellers. All right. So if that's the case, I might be proven stupid here. It might just go straight through, but it's had to pull back, continue down. So if I'm all out of that short, I might be having to force to get back in again, looking for a break of this low now. But if I'm right and it starts to head back up, so this could be a flush low, I'll bring in some shorts, squeeze them back out. All right, we'll just have to see how that goes. But is that making sense, guys? So just a bit of a sideways move there. So yeah, all in all, I think the markets, we're coming into earnings. I'm expecting some volatility coming into this earnings, this week and the next few weeks. I wouldn't expect good results, and it just depends how they frame it. I wouldn't expect. I think a few companies are not intending on giving any guidance because they're saying it's too hard, which is fine. But the more companies don't give guidance, I just think it opens up the downside too much. Considering what's happening, if these viruses don't get up, the number of cases in the US don't get up to with more, well, they can continue to rise. What are they going to do about lockdown? The more people go into lockdown, there's more, probably everyone's looking at it going, well, that's fine because we get more stimulus. I don't know. I don't think you can hang your hat on stimulus continually. When you're down on these lows, fine. And as the market's grinding higher, fine. But as you get to an extended level, just expecting stimulus to keep growing higher, it doesn't add up to the earnings. A lot of these companies you wouldn't expect to be trading at these prices. So we'll see how we go. Put up some, if you want to look at some shares, some charts, anything at all, just chuck into the chat and we'll get into it. I'm just watching. So now look at that 1 minute chart, how it's sort of come down. That would have dragged in a few sellers and we're starting to potentially bounce again. So it'll be interesting to see if we do go through. I'm just watching that SPY for a move down through 59.20, for example. If you're going to sell it through 59.20, you've got buyers here. It's a good place to put your stop. It reacted off there. It's come back into the zone. So you've got, there's some buy stops, some sell stops from the long positions that are just under that level. It's an obvious place to put your stops. So if the market wants to go down, it's probably going to trigger those stops. But if it's not going to trigger. I would expect it to go back up through this high at 59.30. All right, so it'd be interesting to just follow this through to see how it goes. Look at the Dow. Dow's starting to hold below that MA, which suggests to me we could see a move lower. But longer term, the trend up is still pretty strong. You can see that trend up. It's gapped up, pulled back, starting to see some weight here. Doesn't mean it can't sort of grind low and then plow straight back up to 26,350 on the Dow, or 26,4, which, what do we got now? Another 200 points higher than where we are. And then coming into the European session, all the retail pop up on the open and then get sold into. I mean, there's a lot of argy-bargy that goes on. You just got to remember that retail open, professionals close the market. So this out-of-hours stuff on the Dow and the general markets, the Hang Seng, the Dow tends to get played a bit, I think, out of hours in there, which is this session now. the Asian session coming into the European session, and then they start mucking around with it, and then for the US Open a lot of the times. So I mean, you can trade on the back of it, fine, but you just got to be wary of what could be happening. What's that SPY doing? Still hanging in there. Hang Seng. Charts are messy, sorry about that, but didn't get that weakness that I thought here. We've still got these higher lows holding, higher low, higher low. So the Hang Seng is strong too. But that grind up is not euphoria. It's, we've got the spikes selling coming into it, spikes selling coming into it, then a deeper correction, another pop up to the high, holding, selling coming into it. So the Hang Seng is not showing me too much strength either. I mean, I know it's going up, and that's been a good move off that 25,740 to 840. It's only really 100 points. It's not much for the Hang Seng. But that could collapse. We'll see how it goes coming to the European session. So to me, that's a bit of a setup for what's coming to the European session, because we know that Europe was up, US was up. Are we going to get some selling into those open, or are we going to get the markets bouncing into the open? So the markets look quite positive coming into the European Open. Retail starts to dive in again, blah, 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 and then bang, they get hammered. As the market gets sold off, we get some profit taking. Yeah, completely agree. So is there anything you want to look at, guys? Is there anything you want to put in the chat? Shares, we'll just go over with the actual ASX at the moment. So we're only up 32. We've dropped 50 points from the open on the ASX, which is not a very good sign. That's your 5-minute chart. So we gap up in the open, and we've been sold into all session. So that's not so crash hot. If we just look at the 30-minute chart, that's interesting. If for the bulls, you don't really want to go through 5,900. You want to be holding up, maybe holding up here, and see if we can get a rally back up to 61 and above. For the bears, that flush through 60 on the open has dragged enough because of what's happened in the US. Remember, everyone's looking at it over the weekend. If you're retail and all that, your mum and dad investors looking at it going, okay, and they only know how to buy. With that kind of close in the US, especially on the SPY as well, they're looking at the SPY. Everything looks great. It opens above 6,000. They're all in. That's it, longer term, and then we get sold into. It could be a perfect trap for a move down too. So at the moment, it is a 100-point range we're in, but there's an each way bet. You've got a gap up above 6,000, and we've been sold into. We could continue to get sold because that's a flush of that level. Flush, it's trapped a lot of people, and they're going to have to turn around and potentially get squeezed out of the action if they start chasing their tail lower. NWH will do. All right, so let's BSL. I'll just go over a few of these. Rio, was it Rio that I was looking at? Rio, and it's just, we're back up to where it was the start of the year before the sell-off. We're close to it anyway. I mean, it could extend a bit higher, but that's anticipating that we're completely, I would expect for the market to get back up to, let's just go back up where we were. The market to get back up to here, $108, then I would expect we're completely out of lockdown. Everything's looking great. I just don't see why this, even though that looks great, it's sitting on top of the MAs, that's anticipating that demand is increasing, and we're back to demand levels where we were before that sell-off, back up these highs. I just don't think we're there. Hard to believe. And BSL, you can see, go to the weekly. The weekly doesn't look too crash hot, but what we have got is a trend up, big sell-off, chopped around for quite a bit above that $10 level. We've come down with the sell-off and flushed straight through at $10. So that's cleaned up any buyers that you might have bought it off this low. You bought it again. If it hasn't cleaned you out, that means you're just a buy and hold, and good on you. But if you're trading, like I said, on CFDs or margin, you've got to be really careful. And if you're not using stops, it's a recipe for disaster if we do get a sell-off. So that's why I'm suggesting if there's going to be people that move down is just cleaned up, they would have been looking at that low. If we get through there, I'm out, especially with the fear-driven market with that sell-off. All right, so it'll be interesting to see if we hold up through here, above 10, and we start to lift from here. So looking at that daily, the weekly is in not a bad level. We had a bit of pressure from the buyers, bit of a pullback. We're around that 50% mark on the stochastics, meaning 50%, which we could easily rise off this level. Okay, so if we go to the daily, Just want to get, I know, we'll go to the daily, look at the last 6 months. So we're just trying to analyze this. Are we going to start to lift here? If I'm looking to buy that, there's two things I'll be looking for. Again, it comes down to the a shoulder trade. So the market on the short term is down, no doubt about it. Okay, and it's not, say, crash hot at the moment. We've had this move up here, pull back, a move up here, and we've come all the way back down to sort of this buy zone. You can see through here, all the way back down. So that's a decent correction in my book. If we're looking at this stage, it might be just starting to break, but I wouldn't be convinced just because we're starting to get through that I'm going to buy on the close, because we could easily turn around and flush straight back down again and move down to those lows. I want to see that high low. I want to see the markets go 1, 2, 3, 4, 5. We're starting to pop back up. I want to see it push right back to around, through 1150, 1170, thereabouts. And then I want to see the high low build from there. If we see the high low, I'm willing to buy off that higher low and for a move back up to at least 1350 and potentially right back up to 16, right back up to these levels. Okay, so that's BSL. Doesn't look too bad. It's just, I think it's just because we've got a level here, it's below the MAs. Now, when you're below the average, remember the MAs are the average. So it was looking quite bullish here, and we've come back down. So the average person has been selling it right from the start of June. Selling, 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 selling. We've had enough momentum on the upside in the equity markets to warrant some better support, but we haven't got better support. So if you're just going to buy on that break, break of that candle there, to say you bought it today, break of 1122, no reason why I can't break that, finish below, straight back down again. Just flush people out, turn around and sell back down again. So that's why I'll be looking for that higher low to come into play as evidence, especially if it's considered above the MAs. Sitting and bouncing off the MAs, to me, means the average is a buyer, the average person's a buyer. Not at this stage, the average is a seller, and no one's willing to stand in the way of that selling just at this stage. Okay, with this grind lower. All right, so that's BSL. I keep losing my mouse. So anyone that doesn't know, I've got a fancy mouse now that can go on 2 computers. So I've got my laptop next to me. Every time I push it off the screen, like across to the right, which I do out of habit, it goes straight across the other one. I have to wait about 5 seconds before it can drag it back again. Irritating, but it means I can use it on both through the Bluetooth on both the screens, and the same with the keypad. I can actually choose which computer I want to type on. It's quite fancy. Quite proud of myself, except it starts to get irritating when you're trying to stay on this one screen. So let's look at NWH. Okay, so that, to me at the stage, is going down. I mean, we have to go out of time frame, so it's whether we're going to find support here. If that was bullish, I would have expected to hold above 2. I wouldn't have expected this sell-off to take out this low. All right, and you can argue we've closed the gap. We closed the gap a while ago. Now we're going straight back through there. We've got weakness coming into the action here. Okay, so what's that going to do? Where are we going to hold up? If you go to the weekly, big smashing down here. It's dragged out. So if you go right from that low, about $1, so that was right back in 2017. Anyone that bought it above $1 after 2017 was right under pressure there. So they're either out or they're holding for their dear life. With this secondary weakness, this potential leg coming in here, if you're holding, especially if you bought it at above 260 or thereabouts, even if you bought it on the break of this high, there's a lot of people that are still underwater. Anyone above 2 is underwater. Okay, and that could take us right back to 2018. Any buyers that bought it in 2018 late, you bought into this break, are either at break even or potentially underwater. So you've got to be looking at that, thinking, what's going to happen if you've rode this down? Right, if you're a holder and you rode this down, a big sell-off, you just determined not that it's going to come straight back up. Use mouse without borders. It lets you do what you just mentioned, but is instantaneous. Can you send me a message of how to do that? I just got a pop-up on TradingView. I'm not very IT savvy, but that would be great if it's a bit. I'm gonna have to look into that then. Microsoft Garage. All right, sure, fantastic, legend. Thank you very much for that. All right, so we've got this big sell-off. We've got the bounce. So if you're holding it, especially if you bought it anywhere last year, you're basically underwater, unless you got lucky right at the start of the year. But buying above 1, you've got back into profit territory and back above 2, and you're feeling quite good about yourself. But now that the fact that we're starting to come down, on the weekly chart, and there's more than enough fuel, enough energy on that weekly. You can see that it's gone from overbought to oversold, gone sort of hovering in just overbought territory again, and we're starting to head down. So sellers are in control. And if you look at that daily, and that's been from say mid-May, sellers are in control. All last month there was selling pressure. All right, like I said, if the Dow was all the markets are going up doing quite well, why isn't that going up? I mean, you got to question yourself. So looking at that, if I was looking to buy, I'd be sitting on my hands just waiting, waiting, waiting. I want to see again. I want to see this high low kind of thing play out. And let's just draw that up then. I want to see potentially something like this. If I'm looking there and I look at that, I like to use that downtrend because it sort of sees if we start to get a high low after that, it means that that levels are right. My levels are correct. But if we don't, I might have to adjust it to something like this, for example. All right. So that's why I like to use that. So for example, this one here, that's a perfect example. So if you're looking at that, at that stage, you get that pop up and you bought it, but you're wrong because the market's drove straight back down and took out that low, would have stopped you out if you're using margin. So then I'd have to readjust it and say, okay, maybe that's my level. There's no real, this is just a big flush. So in essence, I want to start looking for high lows to play out. And that would have been, you can see it starting to range there. So I think I'm on the right track. There looks more weight of numbers on the buy side, either coming in or starting to outweigh the sellers. And then you've got this bit of a lift, potentially just in this zone. It could be a nice little high low play out. I know it's way off the lows, but from a risk reward perspective, it's much better. Okay, you're on the right side of the action by then, after all this action's played out. But that's just a quick example of why I'm waiting for the high low, because if there's a high low going to play out here, it should have. We shouldn't have got this drive through this low. So that's why I like to use that, and then I start getting the high low. That's what I want to work off. So at the moment, we've got, the market can easily chop around. It seems quite, channel. So at the lower end of that channel, which means it could bounce back up, you jump in and it sells back off to there, and it's just chopping around. It's chopping highs, chopping out the lows, all that sort of stuff. So that's where I'd want to see after you got this grind lower. It doesn't matter how many lows you make, how many lower highs. I want to see a deeper correction is ideally perfect. If you get this deep correction and then you start getting high low play out, I want to buy that break. All right, off that higher low. So that's my higher low. It doesn't matter what, I'm not talking about this little minor one here. I'm talking about this whole in respect to this downtrend. All right. So that's what I'll be looking at here. And it's not, we're probably a long way from that playing out. Now, this market can easily grind down and take out that level at 140. There's no reason. And we could start to look down to $1. No reason why I can't do that at this stage, showing no signs of buying pressure just at the moment. All right, so I'll be just keeping an eye on that one there, Pete, if you've got it. No, Gino. So what I'll be looking at for the next one, we've got Cat from Pete. That there, look at that. That's potentially a buy through $1.30 right now with your risk at around $1.10. Just look at the weeklies and see that. So when I look at stochastics, no, that's not really good, is it? Month, year. Let's just get a bit more data on that. What I'm looking at stochastics for is if you got strong selling pressure, right? You've gone from overbought to oversold. So anyone that's new, that I use as a pressure gauge more than anything else. And then you got good buying pressure back up again. But the problem is it didn't get back up to these highs. So you go, well, maybe there's more weakness to come in, which it did. It started to come in. You got weakness coming in. You got the selling coming in. You've gone from overbought and you're heading back down to oversold. But the thing is, you're nowhere near this low now at 50 or 60. So there's a good chance it's starting to hold up from the weekly. We're starting to hold up at $1.10. We've got pushing to $1.10, reacted back up. Pushing to $1.10, reacted again back up. And we're starting to get a lift. So sooner or later, you got sellers coming in. If they're going to sell, they're going to be looking at that price action thinking, oh, maybe I should just, I should hold off for a minute because this thing looks like it's going to buoy. So there, you're taking a bit of fuel from the sell side. And then what you're also doing by looking at that price action is just exactly what I was saying. I want to buy through that break. So you've got a few more buyers starting to step into the fray. All right, so what you're getting is that weight of selling pretty much going from, so the weight of the action going from selling to buying, shifting, right? Purely from that price action. So if I was say I was long from here and I saw this big sell-off and I held it through this rally, and I'm thinking, oh look, it's starting to come down again, and we got to this price action. Should I sell? Should I sell? Should I hold? I'd be on the holding side, okay? Especially when you start to drop it down to that daily, because I think you've got quite a good reason to hold it. And I think the line's in the sand at the moment. I mean, we don't know who's going to win, but if you're looking at it and you're thinking, I would hold it because potentially this is the kind of action we're looking at, and it's exactly what we're talking about a second ago. I think if it breaks through $1.30, I'm happy to hold, and I could be back at a break-even trade, or I might be in a small profit, or minimize my losses at the very least if I bought it in this, or if I bought it up here, especially after riding this move down. If I go through $1.30, great. I've got my higher low in place. I've got this failure at $1.05. Once, twice, that's great. Okay, and then for an entry, perfect entry. You know, you've got small risk. You can see that just at a glance. If we get back up to $1.70, that's 2 to 1, 3 to 1, thereabouts. All right, so that to me, good little risk reward. I think we'll keep an eye on that one, Peter, and thank you very much. But if it, at the same respect, if we hold $1.30 and we start to drive lower, and we start to break through $1.05, I'm going to have to readjust my thesis. And I'm going to have to, like I said, readjust my lines, my resistance lines, and I'm wrong. And that could mean that could open up and move down to 90, even right down to 50. All right. So at the moment, we're sort of in no man's land. If you were holding, you'd be praying that it goes through $1.30. If you start to see it go through $1.05, you might want to just bail and take it on the chin, because if it doesn't, if we start to move down and the market sells off, so there's a massive sell-off, we could be down at 50 before you know it. And you're just trying to minimize your losses at that stage. But if we start to pick up, like I said, we start to break up through 30, it's going to take some sellers off the table. They'll want to sell it, they're going to hold off. Anyone that's long and is looking to sell is going to hold off, and then it's going to bring in more buyers. You've got to shift from selling pressure to buying pressure. All right, so we'll see how that goes anyway, but we'll keep an eye on that. What's the last one we'll get into? CAT HTG. Whoops. Just watching the Hang Seng go. God, it's a strong market. There's nothing to say. Let's just go look at that again. Look at that Hang Seng. Now we're back in the new highs for the session. That's great. And so look at that action we were just discussing before. Why you've got to be prepared to jump back in. So I'll be looking at that 1 minute. Like I was saying, maybe taking something off the table. I might have stopped out here at 59.29, 59.30, probably would have been right to the tick. But to see this weakness continue to come back in, you might want to be selling it, and especially on that break there. It didn't really, went another, 21 down to 13. It was another 8, 9, 10 pips. But if you jump back in here and you took some off there, great. That's just your intraday trading, great techniques. But if it turns around and bounces straight back up from here, you don't want to be squeezed out with a massive loss. Hang Seng, Dow, Aussie going, awesome. So HTG, Harvest Tech, what are we on, a weekly, daily? Are you in this, Pete, or are you holding? Because if you're not holding, I wouldn't honestly want to buy that right now. I don't know what they do. There could be some fantastic fundamentals. It looks like it's being ramped. Small stock, no volume really. So the offer's got 114 shares. What's that? 50 grand's worth. That's quite a big offer. The next offer down's got not even $1. What would that be? About 10 grand. 10 grand on the offer at 28.5. You'd probably say 20 to 30 grand on the offer at 28. It's not a lot. So it's kind of thin. So I wouldn't be wanting to get in. It's obviously can be pushed around if it gets ahead of steam, which it has by the looks of it. So for me, on the weekly, I'll be tight in my stop. And that's the methods I use. I mean, there's times when I'm going to get stopped out. If you're long from below 10 cents, great. And if you haven't taken any off the table, I'd suggest be taking something off the table. Or if it gets below 23, take some off the table if you're intent on holding it. That's the way. I mean, if it's great fundamentals, like I said, I don't know the story. The fundamentals is a screaming buy. It should be up at $1. So be it. But it doesn't mean it's going to get to $1 just because the fundamentals say it should be. Because we don't, I mean, we're never going to know the true fundamentals. They can muck around the accounting side of it. I don't know. I'm just a skeptic like that. But if I was holding that around 10, yeah, because it's thin, you know that if it gets ahead of steam, it could still go. I mean, who's to say this is going to be the highest? Who's to say it's not at 50 before you can take a partial? All right. So you want to be proven wrong. You want to be proven that potentially we've found a higher. And to me, on the daily, that's a breakthrough 23. Okay. If you've taken some off the table and you're happy to leave a wider risk on that, maybe down at 16. So you're still getting the gain locked away on you if you took it from 10 cents or so, or even a break of 13 in this zone, or even if this zone, you might have to, if you took it in this zone, a break of those highs at 321, your stop's at 16, great. You might raise your stop. You might still take some at 23, take some off the table. So either way, it's still a good handy gain from 20 down up to 23 or so. What's that, 6%, I think, thereabouts. So it's a good handy gain. Yeah, for my, I would have taken some off. I just can't help myself. Always like to lock away some gains, and then I'll be happy to give it a bit of room to move. And like I said, it's from there. If you're doing that, all you're doing is trying to pick a level where a level that you would expect to be proven wrong, right? So where essentially could you be proven wrong? Could be proven wrong through 23. It might be that it takes out 23, starts to come down to 21, gets supported again. All right. So in that case, your 16 is probably a better level. Just depends how much risk. If you book in a game right today, for example, from 10, you've nearly tripled your money on half of it at least. Great. I would give it more risk on the long side. Now, if you haven't tripled your money because you got in around 18 or so, you might not want to give it too much room to move. Right. So it just depends where you're from, all that sort of stuff. But either way, those two levels. Now, if you haven't taken anything off, I would, but like I said, it could still keep going because if this was something like BHP, Rio, thickly traded stocks, they're not inclined to keep running on euphoria, and they're going to react to the market. Whereas you could have a sell-off tonight in the US, and this could do nothing, and then we get bought up the next day. It rallies hard. This could just take off because it's all about euphoria and who's holding and how it could be bullied, I guess, on thinner volume. So if that's the case, you can just leave it open to trade up a bit more. All right, that's probably all I was just going to be wanting to talk about today. I hope everything helps. I hope it was a good session. Even though I got sidetracked quite a bit, I hope it was a good session to chat about. You can just see what we're looking at, especially intraday trading. 10 cents legend. Yeah, exactly, mate. It's kind of one of those things where, the more vertical it goes, there's two things that can happen. It can go harder or it's going to come down hard. So you've got to judge and weigh up, what should I do? Am I happy? And it's probably coming down to the fact that if we don't get much weakness into the overall ASX, why would you just get out just yet? Why would you book some? So no, fantastic, mate. Fantastic. So yeah, that's everything I wanted to talk about. Hopefully you enjoyed that. If you did, it'd be fantastic if you can leave us a like on the YouTube channel. If you're not subscribed, just subscribe to that, and we'll keep posting bits and pieces on there. So anything we do post, we send out to our email group. Anywhere is generally put up to, especially if it's a video, it's put up to YouTube as well. So you'll get quite a bit on that up there if you subscribe. So it'd be great if you can follow us on Twitter. We've all got bits and pieces everywhere. So best to go to TradeSetup.com.au and just see where we're at and get the links. Anyway, guys, fantastic. Enjoy your day. And we're back on tomorrow about 9:40 it's just a short session to see what happens tonight in the US and talk about that and any intraday opportunities we might get for the day. All right, guys, enjoy yourself, and we'll speak to you again soon. Bye.